We've been saying for longest this is 8300 to 8600 range in the near term. Now you're reaching the lower end of the range. If you break the lower end of the range, the next hugely important support for the market is at 8000.
Okay, it's a 1% cut. As feared, it is below the 8,300 mark. It's a very ugly start to the market. It's a market that didn't fall, the Indian markets and the currency, and now it appears to be falling with a vengeance.
History of last 20 years of equity investing has told us that when the actual retail money arrives, that's the time to exit the market in those sectors.
India presents a far better picture and much more positive picture vis-a-vis the other countries. So therefore, in the global arena, if you look at it, the only limited number of bright spots that we have, India is certainly in the forefront.
There should ideally be no place for either a cap or a floor on airfares or for that matter for any kind of prices in the market.
Playing for a bit of a recovery for the market, so we've recovered a little more than 0.5% on the Nifty, a recovery of 1.2% on the mid-cap index.
Yes Bank goes home once again as the biggest loser, down about 4%, followed by IndusInd Bank down 2.5%, Axis Bank down 1.5%, and Kotak Mahindra Bank as well. Apart from that, you have cuts in the auto space today. Bajaj Auto down 4%.
Issue today is, will the Fed raise, will the Fed not raise, when will it raise, if at all, if not. So there are so many factors at play. How the global economy works out, how the Chinese economy works out, what the Fed will do, what our Reserve Bank will do. So there are lots of things.
Good evening and welcome to India Business Hour. I'm Surabhi Upadhyay and Kritika Saxena right here with me in the Mumbai News Center. What a day and what a week for our markets. Indian equities falling almost 2% for the week and a pretty terrible session for the Sensex and the Nifty today as well. Blame it on those global cues. The sell-off that started in Asia extended to Europe, and right now, Kritika, Wall Street, deep negative territory.
Sea of red over there, in fact. But it's not just the markets, Wall Street that we're looking at. All the FI outflow meant that the Indian currency also hit a fresh 2-year low. Yeah. So commodities weren't spared either. So what are all the experts and the policymakers making of this fat tumble? And what's the way forward really? Will we see some kind of recovery? We've got all that and a lot more lined up for you through the show. But before that, let's take a look at all the top stories that we're tracking for you today.
We took a feedback midweek from the merchant bankers, and they have been in touch with the foreign investors. They feel there's excellent appetite there.
Lower global crude prices and a stellar first quarter gives the government the confidence to offload 10% stake in Indian Oil Corporation on Monday.
Foreign institutional investors may not have to pay the minimum alternate tax after all. Sources tell CNBC TV 18 that the Finance Ministry may accept the Justice AP Shah Committee report, which recommends giving FIIs relief on MAT.
Global markets on the edge on the back of poor manufacturing data in China and announcement of fresh elections in Greece. Asian benchmarks slide 2 to 4%, with Shanghai leading the losses. Europe manages to recover from opening lows but ends in the red. The sell-off extends across the Atlantic as well. Wall Street nosedives in trade.
Crude prices all set to post their longest weekly losing streak in 29 years. NYMEX is just barely holding above the $40 mark. Brent loses 2.5%.
Partial relief for Raymond Group Chairman Emeritus Vijay Singhania as the Bombay High Court refuses to grant interim relief to his grandchildren who had sought a stay on the family agreement of 1998.
After facing resistance from farmers to give their land under the land pooling scheme, the Andhra Pradesh government invokes the Land Acquisition Act to acquire land in 10 villages, issues a notification in this regard.
And Air India runs its turbulent weather with at least 11 flights getting delayed after pilots call in sick in protest, even as the Director General of Aviation suspends 2 Jet Airways pilots for neglecting standard procedures during a Doha-Kochi flight.
Bondholders of Castex Technology, formerly known as Amtech Technologies Limited, complained to SEBI and exchanges that Castex shares saw unusual price movement ahead of the company calling for a conversion of bonds into shares.
Also on the show, Bengaluru continues to struggle with its own set of civic problems as the city gets ready to vote in a new municipal corporation tomorrow.
Well, markets are making headlines. It's been a tough week for Indian markets, and more so today with global jitters hitting the Wall Street quite hard. So the Nifty cracked below the 8,300 mark in intraday trade, losing more than 2% this week. The Sensex ended the week below the 27,500 mark. It was the Bank Nifty which continued to be battered in trade today as well, and heavyweights like L&T and Tata Motors, among others, slipped in trade. We've got Anuj joining in to take us through what's been quite a washout week for the markets. Anuj, some attempt at recovery in that last hour, but not enough to see green, right?
The day was bad for the bulls. The relief was that it wasn't ugly. Towards the end, in fact, the market saw a bit of recovery. And it was important because so far we've been talking about the Nifty being in 8,300 to 8,600 band, and the Nifty closed right at the 8,300 mark. So there was a bit of a late recovery. Intraday, in fact, the Nifty had slipped below 8,250. So from that point to come back to 8,300, that would have soothed some nerves. But still, it was a bad day and it was a bad week. No taking away from that. And yet again, the biggest sector, which is the banks, that led the underperformance or the decline in the market. Let's talk about the stocks then, which led the market lower today. As I said, it was all about banks. Yes Bank clearly has a problem of its own right now. That stock was down second day running, 4% lower, and big volumes in Yes Bank. IndusInd Bank as well down 3%, and Axis Bank was down about 1.5%. Some heavyweights that pulled down the market included Larsen & Toubro, HDFC, and Tata Motors. Some other prominent losers included stocks like Vedanta, Bajaj Auto, and Idea Cellular as well. On the gaining side, we had some names like Hindustan Unilever, so some defensive buying was visible in Lever. Ambuja Cement was up about 1%, and Infosys, after yesterday's losses, regained some of that, up about 1%. In the broader market, there were some big winners as well today, though. Stocks like Delta Corp, where Rekha Jhunjhunwala bought some stake. That stock was up 5%. Videocon was up 17%, recovering from yesterday's losses. And Hotel Leela was up about 12%. And finally, on the losing side for the mid-caps, then, a lot of stocks again. Central Bank, big problem stock now. 20% down yesterday, 8% down today. Metallist Forging, the MTech group company, that was also down, and we had Balrampur Chini that was down about 5%. So for now, the Nifty just about managed to hold on to 8,300. The key would be what happens next week, because next week is also expiry, and there's a good chance that if the weakness continues, we may have a bit of a trend reversal for the market.
But a big disappointment, of course, through the week. Anuj, thanks for joining in with that. But the optimism on the streets clearly seems to be waning. Experts feel that the insularity of the Indian market has been tested clearly by the recent weakness in global markets, and it has been found wanting. So in this situation, what trajectories are indices likely to take going forward? Here are some views we got through the day.
The growth rate at 6 to 7%, P's at 30s and 40s. Is a pretty unsustainable mix. That's one. Number two is, it's not necessarily that the fundamentals have given way overnight. It's also the structure of the market. Lots of margin call, lots of people getting out, lots of people not able to meet up the obligation on the middle, the mid-cap story that they have bought into. So it's a whole potent mix which is coming together of fundamentals on one side. That's one. And number two, of course, let's not forget, globally there is a problem in the market. And I think the takeaway from this whole last 3 days is that the whole concept called insularity of Indian market has been tested and found wanting.
Our own sense is that, at 82.50, round about the levels that the market is trading currently, hopefully we should see a short-term bottom in place right now. Having said that, given the conditions in the global market, the way the currencies are behaving globally, an 8,000 level is not is not unforeseeable. So from an expiry point of view, given the kind of positioning that we have seen, probably a short-term bottom over the next 4 days is in place right now. But if it breaks that, I don't think 8,000 will get broken at all.
Okay, some voices from the market there. Now, markets might be in turmoil, but that doesn't mean that the Finance Ministry is in any hurry to announce new measures. That's the message coming in from Finance Secretary Rajiv Merici, who tells CNBC TV 18 Sapna Das that policy decisions are always work in progress and cannot be taken in a jiffy.
Market in any case is, determined by so many multiple factors that it is impossible to say whether the market is nervous or not nervous. I believe towards the close of the day today, the market did recover substantially. So market takes into account all sorts of cues, and it's impossible to say why it is reacting. But as far as India's reactions to world developments are concerned, I would say this is work in progress. It is not staccato, it is not one time.
Now in terms of the exchange rate is very different than what it was earlier during the 2013 rupee crisis. Your thoughts?
See, basically the rupee is not a controlled currency. Its valuation is value determined by the market. It has been so for the last 25 years. Now, so to give an absolute figure of what one is comfortable with or not comfortable with is impossible because it depends on so many other things. So what I would say is that two things need to be kept in mind. One is that while the rupee is devalued against the dollar, it is actually appreciated against the other currencies.
All right, as promised, shifting focus now to Main Street. The rupee continues to weaken against the dollar. The Indian currency ended at a fresh two-year closing low of 65.83 versus the greenback, and again versus 65.54 yesterday. The rupee, along with most other emerging market currencies, has come under sustained selling pressure since China devalued its yuan on the 11th of August. Tata Venkatesh, as always, joins in now. Tata, where do you really think the rupee is headed now? Is it likely to stabilize around this mark?
Well, that will depend really on how the global markets move. The rupee has been falling in sync with other currencies and perhaps a little less than them. Actually, if you looked at the current month itself, the Malaysian ringgit has fallen 7.5%. The Russian ruble has fallen 6%. The Colombian and Turkish currencies have fallen about 4.5% each. Even within the Asian continent, the rupiah has fallen more than the Indian rupee. The Indian rupee to date has fallen about 2.4%. You can hardly call that a very big fall. What happened today, it was largely like yesterday, buying by the public sector banks. Now, when the public sector banks buy, the assumption is that they're buying for the government. Either it's a defense payment or it is an oil hedging payment or one on those lines. But other importers also would have bought dollars because you saw dollar getting expensive. But at higher levels, you also had some selling. Meanwhile, the suspicion is that some FIIs also may have bought dollars because we are seeing a lot of FIIs selling their shares, which means they are booking dollars and taking it home. Exporters was noted selling around that 65.80 mark because it's a damn good level. It's a level they've not seen in 2 years. So there was some supplies coming from exporters as well. Where does it go from here really will depend upon how the EM currencies move, whether there is too much of volatility in China, more depreciation in China, too much of risk aversion globally. At the moment, it looks like 66 will be a natural support. I don't think it's to the advantage of the Reserve Bank either to see a continuous fall in the rupee.
Absolutely. Let's hope that things get stable for now. But let's take a look at the global shows then. And starting off first with China. China's stock market has suffered yet another terrible day. So the Shanghai Composite closed down over 4% in a nervous sell-off. So the trigger was disappointing data largely from China's factory sector. The flash market manufacturing PMI dropped to 47.1 in August, making it the worst reading in 6 years. That shows a sharp deterioration in conditions and of course intensifies fears that China is slowing down fairly fast. And here's what is driving the European markets. Important political developments coming from Greece after Prime Minister Alexis Tsipras tendered his resignation and called for snap election in September. 25 far-left members of his Syriza party have broken away to form their own party. It's called Popular Unity. It's an ironic title given the disunity within Syriza over Greece's bailout. Popular Unity will be led by the former energy minister who, remember, was sacked last month for voting against the bailout deal. It will be the third largest group in the Athens parliament.
Will decide if this agreement we achieved is enough for the dead end we have reached to be overcome, for the economy to rebound and for us to finally extricate ourselves from bailouts and austerity.
Okay, let's tell you what's happening around the world. European stock markets traded sharply lower on Friday in what has been a pretty volatile day of trade, largely negative. This because worse than expected Chinese economic data and a new election in Greece have been spooking traders. And we can see those deep cuts on the screens out there. About a 3% decline on the FTSE. The DAX losing almost 3% and the CAC as well. So it's a severe carnage across the board. The picture is same across the Atlantic as well. Wall Street is trading in extremely negative territory. Benchmark indices now extending that fall to 2%. Equities on their way down. and no respite on commodities either, particularly crude prices. In the intraday action, there was some attempt at recovering, but that has not lasted at all. We can see that slide taking NYMEX back towards that 40 mark, and Brent is also sharply lower by nearly 3% for the time being. So big carnage playing out across asset classes in the world. But back home, there could be some great news for foreign institutional investors. CNBC TV 18 learns that the government may actually accept the Justice AP Shah Committee's recommendations on the controversial MAT issue. Sapna Das is joining in with the details. Sapna, the market has been holding its breath on what the government will say on MAT or minimum alternate tax. What's the latest twist?
Well, this is indeed a positive development. Top government officials are indicating, or rather have indicated very clearly, the government is viewing the AP Shah panel recommendations favorably, and the AP Shah panel has recommended that FIIs should be exempted from the levy of MAT prior to April 1, 2015. This is on expected lines, but the kind of a long silence on the part of the government after the AP Shah panel report had been separated had created a kind of a nervousness in the markets. You know, people were not very sure that is exactly what the Shah panel has said and whether the government will actually accept those recommendations. Having said that, just yesterday, CNBC TV 18 had reported exclusively that, in fact, Justice Shah had met with the finance minister once again. Senior ministry officials were also present in that, and of course, the meeting was all about to take a call on the MAT, which is basically what the government has indicated today. Now, the question now is what could be the next process? Is it so that the government will go ahead and issue a clarificatory circular from the part of the single board of direct taxes, clarifying that there won't be any levy of MAT on FIIs prior to April 1, 2015, and all those demand notices which have been issued, they will stand infractuous, or they will be closed? Or would the government actually go ahead and state so in its reply to the Supreme Court of the Castleton case? That is something that we have to watch out for. But my guess would be that probably the CBDT may come out with a clarificatory circular on the AP Shah panel once the recommendations have been formally accepted by the Finance Ministry.
Well, Sapna, as Surabhi said, that will be a huge relief for the market. But the other big story coming in today, and this is something all of us will be watching out for on Monday, the government will sell 10% stake in Indian Oil via an offer for sale on Monday, a move which is expected to help the government rake in more than 9,000 crore rupees in one day. In fact, there were a couple of reports that suggested that if the price is at a premium to the current market price, or at least a 20% premium, which could be possible, it could go above 10,000 crore rupees. And while the government is definitely looking to make the most of a stellar first quarter and lower crude prices, 20% of the offer has been reserved for the retail investors. The offer price will, of course, be announced on Saturday.
We took a feedback midweek from the merchant bankers, and they have been in touch with the foreign investors. They feel there's excellent appetite there. We feel it's a good stock. I really do not want to say anything more about the stock.
All right, Nayantara Rai, who tracks that energy sector very closely, joins in now with more. Nayantara, the big question is the government has finally decided to go ahead and hold the OFS on Monday. What is the logic, and what are the chances that this will be received well by the market?
Well, we've been hearing about this since last fiscal, and it's now official. The government will sell up to 10% stake in IOC via the OFS route. If you look at the current market price and factor in a discount, the government could lap up to 9,500 crore rupees. Incidentally, the IOC stock had hit a 52-week high on the 24th of July. Since then, it has come off by about 15%. And that's why certain analysts that I spoke to raised the question of, has the government missed the boat? But either way, the government quite confident that this OFS is going to be a successful one. And there are a lot of positives when you look at the timing. First up, look at the way the crude prices are falling. Almost at a 6.5-year low, and that augurs well for IOC, the refining major. The other big positive that has come in for the IOC stock of late has been the clarity provided by the government as far as subsidy sharing goes. I've been tracking the sector for almost 8 years, and I've never seen this kind of clarity for the entire fiscal. IOC will not have to bear any subsidy as far as diesel and petrol goes, since those are deregulated commodities. It doesn't have to bear any subsidy as far as LPG goes, because the government has said that it's no longer part of that net. And then you look at kerosene, where the government has said it is going to pay up to 12 rupees a litre. Beyond that, it's going to be for the upstream companies. And last week, IOC actually came out with a brilliant first quarter performance. The profits had jumped 2.5-fold year on year, beyond anyone's expectations. IOC had also surpassed all estimates when you look at the gross refining margin. That had come in at $10.77 a barrel. But, everything is not always hunky-dory. There are concerns. For example, the currency. We've seen a sharp depreciation of the rupee. Today, it closed at a fresh 2-year low. So there will be concerns that if the currency depreciation continues, will that offset the price gain that you will get as far as crude goes? But, that might be pretty minor because the government, I'm sure, will come out with a discount as it always does. And like I said, the Disinvestment Secretary has been speaking to people and she's quite confident this OFS is going to be a successful one.
Okay, Nayantara, thanks so much. That's going to be exciting market action to watch out for on Monday. But let's move on to some other news. Yesterday, we heard RBI Governor Raghuram Rajan weigh in on the non-performing asset burden being faced by banks in India. Today, it was Finance Minister Arun Jaitley's turn, hoping that the NPA situation will improve in the coming quarters. Finance Minister Jaitley today said all efforts were being made to correct the unacceptable level of bad loans in PSU banks. He was speaking at an event organized by Indian Bank.
All-out effort has been launched to correct the health and bring the NPAs down. The effort by the bank administrations, the effort by the government to induce more capital, the effort to get more finance by divesting while retaining a certain minimum share of government holdings, and then greater discretions, and more important, addressing the concerns of each of those sectors, such as steel, power, discoms, highways. These were the high NPA generating sectors.
And some more policy talk. The government may not be in any mood to handhold steel companies any further. Just 2 days after Commerce Minister Nirmala Sitharaman told CNBC TV 18 that the government cannot amend free trade agreements to safeguard only one sector. Today, the Revenue Secretary, Shaktikant Das, said that safeguard duty on steel cannot be hiked just to combat the impact of a foreign currency devaluation.
I cannot pass a judgment on whether there is a case on safeguard. We have to remember that safeguard duty is not linked to some other country devaluing its currency. Safeguard duty is linked to a sudden surge in imports. Now, already on steel, I think as far as I know, some applications have been filed, and that is under consideration of the DG safeguards.
Well, that's something that's going to be a concern for most steel players, given that they've been asking for safeguards, and that's been the only focus for pretty much every steel company since the last 3 to 4 years at least. But let's talk about all the court action, and it was a busy day both in Mumbai and the national capital. So first, the property spat within the Raymond empire. In a relief for Raymond Group's chairman emeritus Vijaypal Singhania, the Bombay High Court has rejected any interim relief to the Singhania's 4 grandchildren who dragged them to court over a family agreement in 1998. Prerna Barua has been tracking that story from day one, and she joins in now. Prerna, a big breather for Vijaypal Singhania, but the road is not completely ended just yet, has it?
Well, the 6-month-long bitter battle being fought within the Raymond Empire is just not over, but the Bombay High Court today has given an interim relief to Vijaypal Singhania and has dismissed the grandchildren's petition that sought a stay on a 1998 family agreement. In fact, the Bombay High Court has refused to grant any interim relief, and the relief that was sought from transferring assets or creating any third-party rights on ancestral family. Let me give you a background to this. The 4 grandchildren of Vijaypal Singhania had, filed a petition that was signed in 1998, which is a family agreement that was signed between Vijaypal Singhania and Madhupati Singhania. And in the petition, the 4 grandchildren has alleged that, their rights as minors cannot be neglected, and that the right to property cannot be denied by their parents by way of a family settlement agreement. So clearly, the family drama will continue. But as of today, there is interim relief to Vijaypal Singhania. But of course, the actual lawsuit will continue to be heard before the Bombay High Court, and we will have to wait and watch as to how this family drama unfolds. Back to you.
All right, Prerna, thank you so much for that. Moving on, the Supreme Court will now hear the PIL filed against the government's land ordinance after 4 weeks. This even as the Government Council refused to divulge whether the government plans to re-promulgate the ordinance for the 3rd time around. Ashmit is joining in with the details. He's been tracking all that action at the court today. Ashmit, any sense of what can be expected next? I mean, what did the government really say in its affidavit today?
pulling towards deafening silence. That's what we got today in the Apex Court. No clarity coming from the Apex Court. And of course, this is pertaining to the PIL, which had raised the issue of the land ordinance, and land ordinance alleging has circumvented the legislative process, the parliamentary process. Now, in response to that, the government filed its affidavit, and this is where all eyes were on to seek more clarity, given that the monsoon session has rained out, that we haven't seen any action as far as the land bill is concerned. So all eyes were on this affidavit, but no clarity coming in. The government, one, defending its position, saying that its position as far as the land ordinance and the constant repromulgations are concerned is in fact sound in law, sound as per the constitution. But again, deafening silence, no clarity coming in. The ambiguity as of now persists. And of course, the one factor that contributes towards further ambiguity is the changing stance of the government now. Though the monsoon session was rained out, and though we saw a lot of political back and forth, the government appeared to be hinting that there was a U-turn that we can expect in terms of the SIA clause, that's the social impact assessment clause, as well as the consent clause. So two critical clauses that the government was looking to backtrack on. So as of now, the lack of clarity persists. One still has to wait and watch whether or not the government will go ahead on August 31st and repromulgate the ordinance the way it stands right now, with minus these two clauses, or will it consider perhaps allowing the land ordinance to lapse. So clearly at this point, the ball is squarely in the court of the government to take a call. The Supreme Court on its part has given the government about 4 weeks' time to come back with its reply. Back to you.
Well, Ashok, we've been waiting and watching for a long time, so let's hope that things actually happen now. But moving on, after facing resistance from farmers to give their lands under the land pooling scheme for capital development, the Andhra Pradesh government issues a notification to acquire land under Acquisition Act in 10 villages. Deepti Bathani has the details. Deepti, firstly, welcome to CNBC TV 18. What are the details and how will this transpire?
Andhra Pradesh government had taken up land pooling scheme for the capital region development, and under this scheme 30,000 acres of landowners had come forward voluntarily. However, 700 to 800 acres of landowners opposed, citing the compensation to be low and the land being agricultural fields. Division bench of High Court had directed the state government not to interfere with the agricultural lands and to follow the law of the land, even if it was under land acquisition. The notification issued on Thursday looks at acquiring 3,892 acres of land in the region for the capital development.
Okay, that's an important development, even as, of course, all the fight around the land acquisition bill continues in New Delhi. Thanks so much, Deepti, for that. Well, it might be the IT capital of India or the startup hub of the country, but Bengaluru is still struggling with its own set of civic problems. As the city gets set to vote in a new municipal corporation tomorrow, we get you some highlights of what the key factors at play are. It may have made it to the list of top 10 cleanest cities in India, but Bengaluru has its own share of civic woes to deal with. Lack of adequate infrastructure, garbage disposal, and water shortage are just some of the key civic challenges that confront the city. With Bengaluru's municipal corporation, the BBMP, being strapped for cash, experts say greater corporate involvement is the need of the hour.
For a city of the size of Bangalore, I think the BBMP simply does not have the capacity to deal with all the kind of civic responsibilities and civic activities that it needs to perform. For instance, garbage management, garbage collection, for instance, the whole area of, infrastructure development, etc., etc. And for all of this, it is extremely important for BBMP to engage with the private sector and to even outsource a lot of this to the private sector.
Not everyone is willing to be as charitable to the city's municipal corporation. With allegations of corruption and misuse of funds surrounding the BBMP, demands of changing the governance structure have been gaining ground. Many citizens feel that the appointment of a mayor will increase transparency and accountability within the system.
Direct election of a mayor with full powers will be a good thing for the city, because ultimately you need a CEO for the city who will take full accountability and make sure things happen. That is one of the reforms the government has been talking about it for a long time, but they don't have the political wherewithal to do it. Hopefully the new corporation which comes in, if they implement that People's Manifesto in both substance and form, probably the city will become better.
The Greater Bengaluru City Corporation is among the 5 largest municipalities in India. As 71 lakh citizens cast their vote tomorrow,
They will hope the new corporation sorts out the legacy civic problems plaguing the city for over a decade. With Purnima Murli in Bengaluru, Surabhi Upadhyay.
Well, I don't know. It's a fairly pretty city, but of course, the reality is...
You go to the pretty places like Electronic City and nice campuses like the one that Infosys has.
We'll know tomorrow, and we'll know on the 25th, I think, which is when the results will come out. But with that, it's time to wrap up this edition of India Business Hour. Thank you so much for watching. It's a goodbye from Surabhi and me.